I want to bring in now Main Street Asset Management CIO Aaron Gibbs. So you got to be positive like that, Aaron. See, he's optimistic. Well, we don't have to have a demise in this country. And listen, I agree. That's why we do this show. And you're always generally optimistic. And I want to ask you about that because September considered historically the worst month in a year for the markets. We started off pretty bumpy, but I wouldn't panic per se. I mean, all things considered, I still think it's not a bad week.
No, I think given where we were and just coming out of August, totally normal sort of tentative pullback. We saw some of the counter trends coming in where people were getting a little risk off, a little more defensive back in sort of mid to early August, and sort of this is popping its head up again where we see some bad headlines around economics, around China. And I think we're going to continue to see a little more fear, a little more defensiveness for the next coming months until we see a resolution around these interest rates. Because obviously we are seeing, some early signs that these high interest rates really are starting to hurt the economy and slow it down, which is, what the Fed is looking for. But it's a bit painful.
The Fed's looking to put Mitchell Gold out of business.
Exactly.
All right. Recession then. Pause. Over, not, I mean, soft landing. Where are you in that camp?
Again, I think we've just pushed it farther down the road, but the possibility is absolutely still out there. Yeah, I think we can't discount it. I'm not saying it's not going to happen, but certainly not in this year, not in 2023. But look, you've got to be prepared for that to potentially happen.
So I'm looking at the names that you like right now, and they're sort of eclectic. You got a healthcare name in there, you got a home builder, and energy. Molina Healthcare, what's going on there?
So it's a high-quality name, good value. It's had a nice run-up. I like managed healthcare. Some of my other picks have been underperforming a bit, United Healthcare and Alvina. But I think it's just, again, one of the defensive plays. You're not going to get hurt too much as we get a little more conservative. And Molina, again, just a good value, good safe bet.
What's the deal? Yeah, I could see, you like the risk reward probably as much. It's a good place you sleep at night. Pulte Homes, this unique situation where, no one's willing to sell a house. So home builders kind of get to call the shots here. Right.
And look, this is a secular trend where we just don't have enough housing for the population. And so even though we know that sales have really slowed down to a crawl because basically no existing homeowners are willing to sell their houses anymore, that still means that new homes are selling.
So even though mortgage applications are down huge and foot traffic is down huge, it's mostly a product of just why would you put in an application if you can't find a house?
Right. And why are you going to try to buy a new house if you can't sell your home and refinance at triple your mortgage rate? So definitely there's less activity, but that doesn't mean that new homes aren't selling. And so those new home builders like your Pultes, your Toll Brothers, they're still doing exceptionally well, and their houses are selling.
All right, and you like energy mostly still for a trade, though, right?
Yeah, short-term trade. I'm not talking about this is a secular long-term. This is something that you need to be on top of and watch for breaks. Watch for the headline.
Thank you very much, Aaron. Appreciate it.
Thank you.
All right, folks, we'll be right back.